Morning. We'll get going in a few minutes. All right? Yeah, good. Good. You almost ready? Almost ready to go. What is it? 90 seconds? Right, pretty much ready to go. How about you? All right, let's just call it a call it. Let's call it. I got to move everything out of the way. There it is. There's the chat. Then I got to get to the streaming software, and there we go. So we got the 822, it's ready to go. So welcome. Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Guess what? We're going to do euro dollar. We're going to do gold. We're going to do Bitcoin. We're going to do the S&P 500. We're going to do the 10-year T-note. We're going to use technical analysis, in particular pattern recognition, to look at the opportunities and threats in those markets. We're also going to do a headline radar update. We're going to look at the calendar very quickly. And burn through our Forex.Today fast and furiously, because who's got time to wait? So let's go. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. And today we're going to use traders.com and the execution partner of Traders Way to do our technicals and fundamental analysis, put everything together. So let's start with our macro overview, both long-term, long data, right? Long-term analytics, but also short-term analytics, right? We got to combine those. That's what it's all about. So we'll go here and bada bing, bada boom, just load it up. Come on now. See, TRADARS is a live database. Yep. So we're actually loading. You see the blue line there? Yeah, so we just did all these calculations. Right now, the market is slightly risk on. We got a 3 here. Euro seems to be strong, or is it pound weak, Aussie weak, USD weak? Over here, pound, Aussie. So maybe a little bit of both. Right now, we're leaning toward risk on, and in those situations, hey, well, dollar typically weakens, and these things that are weak are usually strengthening. So like, whoa, what's going on? Yeah. Well, you know what? We're in a unique position here where fundamentally, meaning like based on seasonality, which we have over here, we have all these different seasonality tools to tell you what normally happens. And we're in this situation where we have our normal happenings plus this idea that we found like we had the FOMC on Wednesday, we had non-farm payrolls on Friday, we had the craziest revisions ever. We got people at the BLS fired, and like on top of Trump tariffs, right? And so maybe this year is unusual. We don't know. So I'm going to do a quarterly update tomorrow at traders.com. Tomorrow, Wednesday, noon. If you attended the annual outlook, well, then we did a second quarter update. This is our third quarter update. We're going to do a fourth quarter update. Yeah. So anyways, tomorrow we'll do the third quarter update, which is amazing because the whole gold dang thing was only $50 for the whole year, right? So anyways, we need to do the update tomorrow. But nonetheless, we got this really interesting situation. And so we have yields coming down, gold, stock market going up, gold coming down. So all of that is right as rain. But then, well, we got to be careful. What about today? So we were at 100. Now we're back down to 98. So whoa. One of the things we've already looked at earlier today is the multi-time frame risk gauges as well as a scatter plot. Okay, so today's going to be an interesting, complicated scenario. And US ISM services PMI and we need to see what happens. So, anyways, this is the headline radar. What's happening right this second? Let's take a look. Let me reset this. US ISM services PMI preview. July data estimated to showcase soft landing narrative. Oil prices continue to fall following OPEC plus output raise.
Pres Trump. Survey data is very antiquated and also political. The US dollar is modestly higher to start the NA session. Stocks higher, yields higher. FTSE 100 advances on upbeat earnings. Eurozone producer prices rise 0.8%.
Pound little changed, outperforms mildly. Scotiabank. Euro consolidates in quiet trade. Scotiabank.
Canadian dollar slips, strays from fair value. Scotiabank.
Euro, chart US dollar, extends its reversal. US dollar appreciates with US services data in sight.
Cool. Yeah. Well, I was going to go to, you know what? Let's go back to this calendar. Hang on. And we have balance of trade coming out of Canada in 1 hour, and then we get our PMIs coming out shortly after. Later tonight, we have Kiwi jobs report, so put those things on the calendar. Now, as far as the balance of trade, once again, TRADARS meets every morning before this live stream. So we've already done everything in detail, but you should already know, like, if it comes out good, bad, or ugly, what are you going to trade? And we already have this planned out. So we know there's a 75% chance of one particular move, and we have different currency pairs that we can look at it, and then we can go through all the historical stuff. So we've already done this. We already have a trade plan based on that. So if you're walking into the Canadian news and you're not sure what to do, well, I can fix you. We already have that. That's just straight up standardized. Okay, remember, this is fast and furious. This isn't slow Forex. So what we're going to do today is we're going to look for patterns on the 15-minute, 30-minute, 60-minute, 4-hour, and daily charts. And we're going to do that for Euro dollar, Bitcoin, 10-year T-note, gold, S&P 500, and we are going to look for all patterns, up patterns, down patterns, sideways patterns, reversal patterns, Fibonacci patterns, Gartley patterns, all kinds of things. We're going to look at everything, okay? But the thing is, when you add all that up, that's, let's say, 1,000 charts, and, 1,000 potential patterns on all those charts. How long does it actually take? Well, it shouldn't take very long, and this is Fast and Furious, right? So it shouldn't take very long to look at all those time frames on those assets. But remember, before you even look for the patterns, you have to understand, are you a bull or a bear? We get that through all their fundamental sections. We have scorecards. We look at GDP, inflation, institutional positioning, retail positioning, monetary policy. We look at all these different things and we do comparative analysis of macroeconomic data. So you should know right away, are you selling Aussie or not selling Aussie? What's the problem? Well, Wayne, I have no idea. That's your problem. So going through this Fast and Furious, I'm assuming you've already made your fundamental biases and you actually are tracking the flow of capital around the world. If you're not doing that kind of stuff, you're not trading Forex, right? But whatever. So I'm assuming you already know if you're a bull or a bear. Okay? So we're going to go through all of this and do it quickly because this is about hyper focus. So we're trying to increase your noise to action ratio. Anything could happen, millions of variables. Oh, but Trump this, and oh, but the Fed that, and oh, this tariff. Whatever, dude. Are you a bull or a bear? Are you a buyer or seller? Have you made a decision? Okay. I hope you're a boss and you're the one making decisions. All right. So let's go through this quickly. Okay. 3, 2, 1. Let's go. All right. Looking at the 15-minute, 30-minute, 60-minute, 4-hour, and daily, what do we see? On a 15-minute chart, it shows weakness with an opportunity. Bitcoin, Bitcoin, Bitcoin. What do we see on Bitcoin looking at all those time frames? Okay, it's in an uptrend on a daily chart, and there's a threat. Doesn't mean sell. What it means is you look in here. If you're a bull, okay, let me change my colors. Okay, you're going to want to look for an opportunity to buy here. But Wayne, there's a giant red arrow. Yes, if it makes a lower low, then you need to be careful about something like that. Has it done it yet? No, but it should be on your radar. So if you're a bull, then what you're thinking is, if it's going to go up, it better go up now. Cool. So now you see that on the daily chart for Bitcoin, the trend is up and you're at a roll reversal. So if you are interested in buying it, go to your chart and do some technical analysis. Get in there. Focus on this. But it's not bullish on a 15-minute chart. And it's not bullish on a 30-minute chart. And it's not. So you would be early, but you should hyper focus on Bitcoin right here, right now, if you're a bull. Now, if you're bear, let it break and catch the pullback. You see? So now you go to your charts and you do technical analysis. That's just pattern recognition. You're using a machine to look at 1,000 different opportunities. And so far, we've only found 2 charts, one on euro dollar 15, one on Bitcoin daily. So you don't have to just look and look. Wandering in hopeless night. No, hyper focus. Look at this. Don't look at anything else. You have to know what to trade, when to trade, why to trade, and get the timing right. Check this out. All right, the 10-year T-note's been consolidating. Looks like we may have gotten a break. So if it continues, buy a dip and let it rip. Okay, that means treasuries go up, yield goes down, and that is an indication that the Fed, indication by the open market that the Fed is more and more likely to cut in the September meeting. What does that mean? Yields fall, stock market goes up, everything is right as rain. Boom! Helps you focus. Are you a bull or a bear? I've asked you. Are you risk on or risk off? Well, yields falling. It's probably a sign of risk on. Is that usual? Not this time of year, but it is what it is. So, do you have confidence in it, or are you cautiously going along? Well, being able to qualify, not just quantify, but qualify the opportunity is critically important. Now, how do you feel about gold on a 15-minute chart or a 30-minute chart or, all that kind of stuff? Are you a bull or a bear? What's the market doing? Are you loving gold? Are you disappointed with gold? Let me tell you about gold. Okay? Looks like we're going to try to retest that 3,500 level. We have resistance here on a daily chart. So you got a heads up 13 hours ago that maybe we're going to go back and test that. So you probably want to be buying dips if you're a bull. Maybe kick it off that moving average. Here's a different version of the same thing. We're consolidating near resistance. The thing is now we're connecting the lower low, lower high, and it's showing consolidation. Non-directional. So it doesn't tell you if you should be long-term long. So are these great trending opportunities? This says back to resistance and then question mark. This says we're actually, the range is getting tighter and tighter and tighter, which means more and more uncertainty and less opportunity until it breaks. Has it broken? No. Done. Oh my goodness. Okay. Yeah. So your morning routine that used to take you an hour and a half should only take you minutes now if you're totally informed. What's the stock market look like right now? Is it a good opportunity on the S&P 500? Now, we track Australia and UK and Europe and Japan. We also have NASDAQ. Okay, we also have Dow. For all that kind of stuff, maybe you should subscribe to traders.com. Get some performance coaching along with it. But how long does it take to analyze all of those different time frames? Boom, we're done. So if you look at this, down, up, even a lower low suggests there's still some upward pressure, probably on a higher time frame. So usually what happens is if the 4-hour looks like, if the 4-hour looks like this is your 3-wave correction. So if you're an Elliott wave trader, okay, you get yourself a little 3-wave correction, and then what? Then the thought is this pattern is suggesting there's still, it wouldn't be straight up, but, something like that might develop. So if you're a bull, you might want to be a bull even if it's a lower low, but you know what I would do if I were me? If I was a bull and I thought, well, okay, I don't want to buy the lower low, I want to buy a higher low. So I'd use B as an opportunity to connect the dots and buy it. Now, it kind of looks like an inverse head and shoulders. No, it's just really price action. And so what you could do is if you're a bull here, let it fall if it's going to fall, and then let it turn north if it wants to go back up, and then let TRADARS tell you when bullish patterns start presenting themselves. And it'll be most likely when we're in a scenario like this. And this is where you want to buy. What? That's cray-cray, huh? What do you think about that? Yeah, man. Yeah, what do you think about that? So that's us, man. That's the thing. We just went through all the major asset classes that we trade on a regular basis. Now I can turn on dozens of currency pairs and dozens of stocks and we have 5 or 6 cryptos and all that. So imagine you have everything technically and everything fundamentally, and you're able to organize your thoughts in an intelligent, logical fashion. So if somebody says to me, what do you think about euro dollar? Or Wayne, what do you think about euro kiwi? Do you like it? That's the one where I really kind of laugh. What do you mean like it? I like you. Do I like? So anyway, so to answer that quantitatively, You just look at interest rates and jobs and inflation and productivity and the technical charts and the long-term normal capital flows. You look at institutional positioning and retail positioning, and then you do comparative analysis between Europe and pound. And I don't like or dislike. It is what it is. And we can do it quantitatively and have a score. So like what logically makes sense is euro pound to the up. But you can also look at it the other way. Cool. So now you can only sell things that should be bearish and only buy things that should be bullish. But sometimes even then, what should and what is do not add up. So check this out. Okay, this should be bearish and it's very bearish. This should be bearish and it's very bearish. This should be, oh, wait. I'm saying it wrong. It should be bullish and it is bullish. It should be bullish and it is bullish. It should be bullish and it's not. Is this a buy a dip scenario? Good to know. This should be bullish and it's not. This should be bullish and it's not. This should be bullish and it is. This should be, well, so now you can take it further. And you say, well, these things are neutral, but maybe there's opportunity. So one of the other things that I like to do is line up normality and then put it together with what is. See, like when you go to the homepage, right? It's very powerful analytics, but you have to understand what it's trying to tell you. Our sentiment radars, how does the market feel? Fundamental radars, it's telling you how what the market is thinking. And the technicals, right, are trying to tell you what the market is actually doing. And so what you could say is, no. Ooh, gold. Okay, gold isn't doing great right now, but maybe there is an opportunity there. Maybe I should take a look. Maybe I should take a look at Euro Aussie. It's seasonally usually bullish and it's very bullish right now. Maybe I should look at that today. What about this stuff? Don't look at that. It's a waste of your time. What about this other thing? Don't even look at it. It's a waste of your time. Well, what about, no, don't look at it. It's a waste of your time. And then you can flip around here. This is usually bearish, but it's bullish. Don't trade it. This is usually bearish and it is bearish. Trade it. By trade it, what I mean is go to the chart and look, start doing technical analysis. But look here, don't look there. Should you trade FTSE? No. Should you trade pound yen? Yeah, go check that one out. Should you pay attention to Kiwi Swissy? Yeah, it's working all right. It's a neutral score, but it should be bearish and it is. What about this? Should be bearish and it is. Yes. Don't look at this. Don't look at it. Don't. Now, check that out. Now we're achieving the mission. Every trade you make will be logical and intelligent. You will not be random. You will not trade by feel. Richard says, well, you have to trade with sentiment. Yeah, totally. But you see that in both seasonality. Right now, seasonality won't show you sentiment. Let me take that back. Sentiment wouldn't be reflected on sentiment because most people don't know what that is. But the charts heavily impact sentiment, heavily. And so what you'll notice, and let's go back to that, what you'll notice is when the charts are falling, okay, when an asset is falling, guess what? The media writes bad things. They think it's bad, right? And then when things are rising, the media starts writing after the fact. Oh my gosh, it's good. Starbucks is good because the stock is going up, right? And when the stock is going up, positive articles are being written. But if the stock drops, then all the media after the fact will start writing about how bad Starbucks is or whatever the asset is, right? And that's not the right way of doing it, of course. But what you'll find, in my humble opinion, there are situations in where an asset falls. So let's do gold. Okay, so right now we're neutral. In sentiment, why? Gold hasn't been going up or down. So the arguments, right? Well, title says that, yeah, that depends if there's a catalyst or not, for sure. But you don't want to trade something that's non-volatile because it ain't going to move anywhere. So you always need a reason and rationale, which needs to be logical, intelligent, and then you're able to spot a catalyst. So like right now, gold hasn't been going up or down. So after 45 articles this week alone, they're all neutral. Gold, what the media is saying is gold is stupid. Gold is stupid. Gold is stupid. But let's say after 2 or 3 bullish days in gold, the media will start writing good things about gold and it'll turn positive and very positive. Because now retail amateurs are buying it, but they're buying it after the institutional buy it. So Blue Horseshoe loves Caldecott steel. What does this mean? Okay. Institutional investor 1 buys, right? Caldecott steel, not Credit Suisse. Okay. Then the media, the Wall Street Chronicle, remember? I'm quoting the movie Wall Street, then writes an article that this company is good. So then, right, analysts, so we'll say banks and others, right? Not really banks anymore, but stockbrokers start calling everybody and they're like, dude, did you see the article at the Wall Street Chronicle? And then they go on TV on Duesenberg TV. Right? So those bank analysts go in there, and then what? 401k buyers, right? So stupid mutual fund buyers buy it because they need the flow, and then retail knuckleheads, because it's like this happens first, then this, then this, then this, then this, and now the price is up 30%. And what do these guys do? Sell it. So what happens is it goes from neutral. Okay. Smart money buys, more coverage. The price is going up, more coverage, retail's buying. But it started at neutrality. And why did these guys buy it when it was neutral? Because of fundamentals and seasonality could tell them it's neutral now, but it's going to be bullish in the future. So you start buying it when it's, well, neutral means it's not falling. So you're like, well, we anticipate based on our research that gold will be up in the future. So we'll buy it when it's neutral. And then as it starts going up, the media coverage gets more and more positive. And now that gold's up 20%, what happens? Those that are doing the research say, you know what? Typically this time of year, there's a sell-off in gold, profit taking. So we're going to take our money at the top. And then gold has a bad day, and then gold has another bad day, and then the media covers it, So there's this opportunity using TRADARS to say, okay, gold right now is neutral. Okay. If you go to fundamentals, what does that tell us? So now you go pull up the fundamentals. Okay. We're fundamentally neutral on gold. We're leaning more and more bullish. Okay. We're technically bullish. And what do we know? August is actually a half decent month, but next month is terrible. So we could have this short-term rally in gold, even though the media is writing bad things. The idea is if this starts going up, and it looks like technically it could, and fundamentally or seasonally it could, we buy some gold, the media starts covering gold, all of a sudden sentiment is going up for gold, but we already know that somewhere in August, even if gold is going up and this turns positive, we're already in it, we're enjoying the profit, and then we're going to sell our bullish position to somebody else and get out because we know, we believe, it's not that we know, we believe there's a high probability of bearishness next month. So between now and then, we want to ride it up, take our profit. When when sentiment is at its highest, take profit and dump. Get out. And then suddenly the market collapses, and then all the market sentiment goes the other way. Market sentiment didn't make it go down. It went down because sentiment went down because the price went down. So it's lagging. It takes a couple of days. You can always be a couple of days in front of the market if you made quantitative fundamental decisions before you even look at a chart. And you're like, Wayne, that's complicated. Well, that's why we have a performance coaching team. Peace on earth. May the pips be with you. May your profits be above average. Don't forget, I'm doing a quarterly outlook tomorrow. And then next Wednesday, I'm going to do an update to monetary policy at central banks. Big things happening. I'm also working on some major upgrades and new tools and cray, man. Everything is cray. So I'll see you later. Thank you to Traders Way to providing our execution. Thank you to you for your time and attention. That was the Fast and Furious Forex. Peace on earth. May the pips